The Metro Vancouver real estate market is kicking off 2025 with a huge surge in listings, almost 50% increase year over year. That is absolutely insane. But what does this mean for buyers and sellers? Prices are holding steady, but looking at these numbers, they can change in an instant. Let's break down the key trends that are shaping the real estate market this month, January 2025. Let's go. Okay, let's look at market activity. First is the sales. So there were 1,552 sales in January 2025, a 12% decrease from December 2024, where there were 1,766 sales. A decrease in sales is expected due to the seasonal change in the seasonal slowdown around the holiday season, but a 12% decline from December, where there's the holidays and Christmas and whatever else you celebrate. People are not usually doing transactions during that time. They're usually waiting until January 2025. So I would expect January to see an increase in sales, or at least stay the same, not an 8% decrease. This trajectory may indicate a slowdown in the coming months, but it is tough to say until we look at the February numbers. Only then will we be able to determine whether or not it is a seasonal slowdown or the market really is on a downward trend. But when we zoom out and look at sales from January 2024, so last year, there was actually an 8.8% increase, meaning that overall the market is picking up when we look out far enough. And when we look at year over year change, this is actually an uptick in sales. And that was sales. Now for the listings, they have surged month over month, up 46.9%, reaching 5,566 listings, up from only 1,676 listings in December 2024. The sellers have definitely entered the market, and they have done so in droves. All of the listings that were held back towards the end of the year in November and December have definitely come to the market this month, resulting in this huge surge of listings. I'm going to get into the sales and active ratios, but when we see this huge influx in listings and we don't see much change in sales, in this case, it actually decreased. Normally, we see the market moving from a balanced or a seller's market down to a buyer's market. So with these huge fluctuations month over month, it is important to zoom out and look year over year to see if these changes are substantiated in the long term. And in this case, they totally are. The total active listings right now sits at 11,494. This is a 33% increase from January 2024. So a huge month over month change, a huge year over year change. If there was any doubt before, there is none now. There is a ton of listings available on the market. Right now, buyers have an incredible amount of choice and sellers are facing a lot of competition from other sellers. I'm going to get into what this means if you're a buyer and a seller and what the market outlook is for those types of people. But first, I want to get into the sales to active ratio. The sales to active ratio is a measurement that we use to determine whether or not we're in a buyer's market or a seller's market or a balanced market. And we do this by looking at the number of active listings to the number of sales. So the sales to active ratio in December 2024 was 16.8%. This is in a balanced market. Under 22%, you're in a balanced market. Over 22%, you're in a seller's market. But now in January 2025, the sales to active ratio dropped to 14.1%, a drop of 2.7% overall. This is still a balanced market. A buyer's market is anything below 10%, but this drop definitely indicates that the market is slowing down. More listings coming to the market, fewer sales are occurring relative to the number of listings, and the market is trending towards a buyer's market, but is not quite there yet. And now if we break down the sales to active ratio by property type, for detached homes, we are at a 9.2% sales to active ratio, a market that is slightly favoring buyers. For attached homes, we're at 18.5%, which is balanced, but still closer to favoring the seller side. And then apartments or condos are at 16.5%, pretty much bang on in the middle. Balanced market. And if you want the full details for any of these property types, I did market update videos for each one where I do a deep dive in the numbers and provide a market outlook for each one of those sectors, so be sure to check that out. But next, let's look at the pricing trends and affordability. So first, the benchmark price remains relatively unchanged from January to December. For January, the benchmark price is $1,173,000, up just 0.1% from December 2024. And then when we look at segment-specific pricing trends, detached home prices are up 0.4% month over month to just over $2 million. Townhomes are down 0.8% month over month to just over $1.1 million. And then condos are down 0.2% month over month to $748,000. So as you can see, there's not a huge change overall when it comes to pricing month over month, despite the huge amount of listings that has entered and flooded the market. This is one reason why you need to take these market updates with a grain of salt. Sometimes when you see all this inventory flooding the market and sales are going down, the benchmark price doesn't change. It usually takes a couple months, let's call it 90 days, 3 months, to see the significant changes. And by then, the market conditions can be totally different. So it is very important to consider the sales to active ratios, how many new listings there are, how many more sales there are, versus using the change in benchmark price as your key indicator on how the market is performing, because usually it's totally delayed. So to summarize affordability, the month-over-month changes are minimal, so there are indications that price has remained relatively stable, but with this new influx in listings, and if this continues into February, we will see prices start to soften, and the market may move to favor buyers overall. Alright, now what do we need to watch out for in 2025? So like I just mentioned, will listings drive prices down? When there's a ton of inventory on the market and not many sales happening, it does show that buyers have a lot of negotiating power, and they have a lot of selection. But moving into my next point, watching out for the interest rate cuts. If the scheduled interest rate cuts do occur in 2025, this could change the market. As borrowing costs go down and buyers are able to afford more, this could result in an influx of buyers entering the market, and we'll see if that demand is able to absorb that supply and change market conditions later in the year. In the short term, it does look like with the amount of listings that are on the market right now, the market does favor buyers, and there's a good chance we will see sellers start to cut their prices to be able to compete with these other new listings. But all of that can change as the years go on, depending on the interest rates. Right now, we're seeing a lot of buyers are very interest rate sensitive. And then there's the overall market uncertainty. So there's other external factors, including the US tariffs, inflation, and the shifts in the job market. All of these may have a big impact on housing affordability, but even just the uncertainty of these factors are impacting how buyers and investors are making their decisions moving forward, which may be the reason why we're seeing fewer sales occur this year. So in conclusion, these are my recommendations for buyers, sellers, and then the market outlook. So first, for buyers, more listings means more negotiating power. This is your time to get a really good deal on a property, especially if you find a seller that needs to sell, or if you're a buyer that's looking for a specific type of home. You have a ton of options on the market right now and very little competition. So if you're really picky or particular, this is a really good time to be shopping. If interest rates drop like they're expected to in the later half of 2025, competition may go up and prices will likely follow. Now for sellers, with all this inventory hitting the market, pricing competitively is key. Overpriced homes will sit on the market for longer, and you don't want to be that stale listing. Well-prepared properties that show well, are staged and marketed aggressively, will sell faster in a balanced or a buyer's market. So make sure you have a strategy and a plan moving forward for maximum exposure. And then the market overall for 2025, in the short term, we're seeing balanced conditions. But if the trajectory stays on the same track that it is right now, it may shift towards a buyer's market. But again, with the potential for upcoming rate cuts, it may drive demand later in the year. The question is whether or not that demand will be enough to absorb the existing inventory on the market. And from looking at the numbers from this month, it is a huge amount of inventory. So right now, looking at the numbers, it is pretty hard to believe that there's going to be enough buyer demand that will show up to absorb this inventory on the market right now. If you found this market breakdown helpful, please like and subscribe. I come out with market update videos every single month, and I have deep dive market update videos on condos, townhomes, and the detached market, depending what you are interested in. So be sure to check out those. If you want more, be sure to subscribe, and I'll see you on the next one. Peace.